Joining us right now is Krishna Malani, Lafayette College Endowment CIO, also Karen Cavanaugh, Carolina's Wealth Management Chief Investment Officer. Good morning to both of you. Krishna, I haven't seen you in a long time. I'm very curious what you think is setting itself up here. I don't know if you were listening to our conversation that Becky and I were talking about Jim Chanos' comments just last night in terms of where the market is. He thinks it's overbought still, sort of pricing in a Goldilocks scenario. Are you in the Goldilocks scenario camp?
Well, so Jim Chanos saying market is overbought is not really a surprise, is it? Good to see you.
He is in the short business. That is true.
So, from the Fed's perspective, which is probably matters more than anything else, things are kind of going the right way. And therefore, they have no rush to swat things down as they have done in the past. So I expect it to be at 25 basis points, but at the same time, not aggressively talking the market down. And in that environment, if you're bullish, you probably go along with it. Whether that is sustainable or not is an open question. I think you see reacceleration in certain parts of the economy, and certain areas in inflation are probably stickier than what we think at the moment.
Karen, we're going to be hearing from a whole bunch of companies today as well. Where are you at? And I think, by the way, let's just stipulate, and I will go back to Krishna on this as well. I think we all have a certain expectation of what the Fed's going to do in the next 2 days. I think maybe the better question I should have been asking is, what's the Fed going to be doing come this summer, come next fall?
Well, I don't think that the Fed is going to be cutting interest rates anytime soon. And I disagree a little bit with Krishna in that I think the Fed is going to come out a little bit more aggressively in their hawkish tone, because I think we will have a 25 basis point rise in rates. But I think the Fed is going to be a little bit aggressive just to try to maybe talk the market down a little bit more, because I don't think that investors are really believing the Fed when the Fed says that they're going to stand pat on higher rates for longer, and that they expect that we're going to see interest rate cuts. And I just don't see that in the cards. So I think that the Fed is going to take a hawkish tone tomorrow, and that might not make some market participants very happy. But really, it is all about the earnings, and earnings are coming in. They're mixed. Some are good, some are not so good. But earnings aren't falling off a cliff, and that's a good sign for the market. It's showing that the companies have some resilience, and we're getting a lot of information today, Thursday. It'll be very important to see what happens, and of course the jobs market report on Friday. But I think the Fed is going to be a little bit more hawkish than we anticipate.
Krishna, I know you sort of suggested you don't think they're going to try to talk it down. Why wouldn't they?
Because, there is a risk of a kind of a significant weakening in the economy, even if it seems unlikely today. And given that they're very close to the terminal rate that they have articulated already, pretty close to 5%, it's restrictive territory. They don't accomplish anything by being too hawkish at the moment. Again, it doesn't mean they're cutting. Again, the market may have to reevaluate its pricing in of rate cuts in 2023. But the Fed doesn't have to address that today. Leaving that option open is something that will benefit them. And I think that's why they'll do it.